Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now, in today's video, we've got to look at the rumblings in the currency markets. This could develop into something major. Let's dive right into the chart of the DXY. Take a look at the DXY today, having another big move up. In fact, it's fourth up day in a row. But there was a pattern here that I've covered in my trading game plans that are on the Verified Investing YouTube that have alerted us to this move up. And that was an inverse head and shoulder pattern. And what do I mean by that? Well, basically what we had here was we had this classic inverse head and shoulder pattern, which is a bullish technical pattern. And once the neckline breaks, and let's draw the neckline in, you take basically this point where it goes from shoulder to head, you draw it down to the high of the other one, and that gives you your breakout level. So you can see we broke out yesterday. We've continued with the momentum today, which is very interesting. Now, this is the dollar strengthening, which goes against a lot of what people have assumed would be going on. And what's interesting here is that gold, yes, it's down today, but gold's, again, just as of yesterday, even with the dollar rallying, was at all-time highs. But the movement up in the dollar is definitely putting a little pressure on gold, bringing it in back down towards that $4,000 level. Now, where's the target on the dollar here in the near term? To do that, what we do is a simple measurement here. We take the low of the head, we drag it up to the neckline. This is called the neckline of the head and shoulders, or inverse head and shoulders, and we do a measurement from the breakout point. So from this point where we broke above the neckline, we do that same measurement, and that takes us to a price point of about 101 on the DXY. If we go to a bigger time frame, what we can see, if we zoom out, that actually, interestingly enough, is bringing us into this former zone right here, which was a big dip and a big bounce. And so you're looking again at a target of upside on the DXY of about 101. Now, if we head there, you have to assume gold does continue to pull back. But the rumblings that are coming out are in other currency markets. And by the way, you can see the beauty of the inverse head and shoulders right there. Inverse head and shoulders, don't forget, guys, those are bullish patterns, while head and shoulders are bearish patterns. And remember, it only matters when the neckline breaks. All right, that's when the trigger occurs. Before that, it's just a pretty pattern, but it doesn't really give you a bias until the neckline breaks. That's when you can say, okay, game on, essentially. All right, going back to the chart, let's look at a few other things in this dollar chart. Then we'll get into the dollar yen and the euro USD. What we can see on this chart is we did hit the downside zone here. And so, to be honest, to see a bounce in the chart of the US dollar is not a big surprise here. And I say that because here, very clearly, we have the lows of '08, right? So we're really going back to the financial crisis where the dollar started to gain steam and has basically traded sideways to higher that entire time. And now it's come back to rest at home base. And I'm referring to home base being this zone right here. Right. And so what we could see is we came down and we touched. Literally, this was when the Fed decided to cut interest rates by 25 basis points at their September meeting. And we dipped and we reversed. Now, what's interesting here is this actually formed what we would call in technical analysis a bottoming tail. What is a bottoming tail? A bottoming tail is a reversal bullish indicator that occurs in the candlestick or on that formation. And what it is it's a long tail that points down, right? And it touches support here. That's just an added bonus. So it touched this support area right here, which was that bigger zone. But essentially, you close in the upper 25% of the candle. It has to be the lowest point in recent history, which it was. I mean, literally, you'd have to go back all the way back to 2022 to find the dollar lower. So it fits all the criteria. And sure enough, bottoming tail, which is a bullish reversal signal, look at what the dollar has done since. It's rallied up beautifully, and then it triggered that inverse head and shoulders, right? So that's, again, just a beautiful example of technical analysis at work. Now, again, the question is, how high does the dollar go? And ultimately, do we risk a breakdown? Now, remember the former level. So what level did we talk about here, guys? Where was the dollar going to go? We said around the 101 level, right? That was where the upside target was, like right in here. All right, now on this daily chart, which we now flipped back to, look at when we zoom out on the weekly where that level is. It's actually remarkable. Zoom out, and lo and behold, what do we get here, guys? Look at this. Right through here. Isn't that amazing? So essentially, this tells us that the dollar, to complete the pattern, and this is the beauty of technical analysis. I don't know why it works. I don't know how it works. It's just remarkable. But the measured move takes us back to levels that were technical support for years, the last 2 to 3 years, and are now technical resistance. Look at this. Right here, right here. Here we pierced, but we never confirmed. Here we hit it. Here we tried to get below, never confirmed. Finally, we broke down, confirmed, retraced right there. It now becomes resistance. And now if we complete the inverse head and shoulders, we go right back there. And that's going to be a rejection point on the US dollar. Now, eventually, let's talk further out. So short term, yes, the dollar is very short term, a little bit overbought, right? I mean, it's up 4 days in a row. So you expect maybe a pause day or a small pullback day, right? So if we go back to the daily chart, maybe just a pause day, but really we should continue to move up. The dollar should continue to rally up until it gets into this zone, even if it has a small pullback first before going back to the upside. Now, the other thing to keep in mind is as long as we remain below this zone, you know what it means? It means that probability continues to increase. As long as we don't establish ourselves back above 101 on the DXY, probability continues to favor an eventual breakdown of this longer trend zone. And so listen, a lot of people have talked about the demise of the US dollar. I'm a believer in that. I'm just realistic in that it's going to take literally 5, 10, 15, 20 years. Like, I mean, it is going to take a long time. Now you're starting to see it, right? Gold continues to have record runs. Bitcoin, new all-time highs recently. All of that is true. And I think a lot of that is other countries and citizens and world citizens losing faith in the US as a financial leader, whether it's the debt, whether it's the other factors out there like interest rate policy, etc. Slowly the dollar dominance is eroding. But these type of things, if you look historically at past mega currencies, these currencies that have been reserve currencies of the world, it doesn't just go away overnight. It doesn't. A reserve currency, it takes literally decades. And so I think it started even before this, right? But it's slowly continuing and it will take time, but it is happening. Okay, let's go to the dollar. Here's the dollar yen. Look at where the dollar yen is. So the dollar yen, what a rally on the dollar yen. And what this tells us, by the way, is that the yen has weakened substantially against the dollar. Now, why? Well, number one, the dollar's had a big move. But number two, the Japanese just had an election about a week ago where they elected someone who is much more dovish on policy, not as much of a hawk on raising interest rates and tamping down spending. And that just means that the yen essentially weakens because there's a new event there that's going to mean more printing of money, essentially, right? And they're already at 240 times debt to GDP. So, I mean, that's way worse than the US, by the way. But in any case, that's why the yen has weakened against the dollar. But look at this. I mean, this is an amazing trend line. And so what we need to watch here is, technically speaking, we should see the dollar yen pull back here. All right. Now, the question is, does it make a bull flag for a breakout? Or does it have a bigger pullback? But what we do know is that you've now established a new zone of support right through here. This is all support in here on the dollar yen. So if it pulls back, so notice how it kind of, here it came down, or here it came down, bounced up, came down, broke down, then reestablished, then really broke down. Now resistance, 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 and resistance until it broke out. Guess what? If it comes back, this is going to be support. And it's favoring, honestly, it favors potentially a breakout eventually. Now, we don't know when, but it's just interesting to take note of that. So keep an eye on this. So again, do we pull back and make a bull flag and break out? Do we pull back into this and then get a bigger bounce? But this is now your downside support, major support on the dollar yen is around 149 to 148. Upside resistance we are now at. So if you're a short-term Forex trader, you're looking for a pullback here on the dollar yen. You're looking for a simple pullback. But again, if we consolidate, eventually break out on this, and that could get very, very messy. And you do have to wonder if of all those out there, right? I mean, Japan has the highest debt to GDP ratio at 240. I think the US is at like 120 to 130 right now, debt to GDP, which isn't good either, but it's not as bad as Japan. But the question is do we see the dominoes begin to fall first with Japan, whether it's in a year or two, with them, especially now that more of a print money type leader has been or won the election, right? And so all of these are all things that I'm constantly analyzing as a technician. But quickly, let's go to the Euro USD here. The Euro USD, The euro here, the dollar has been strengthening, but look, I mean, this is a breakout of epic proportions, guys, on the euro. So listen, as a trader, I'm buying pullbacks on the euro USD, and so you can just so clearly see. I mean, look at this: resistance, 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 resistance 2 times. Then it breaks out, and so if this were to come in here, this is a buy. And the euro should honestly, based on what I'm seeing here, the euro should actually, yes, it could, it's pulling back because the dollar is strengthening. But this is telling me that on a retrace and a little bit more of a substantial pullback on the euro against the dollar, you're looking at a bigger move to the upside. This is a major breakout that goes all the way back to the financial crisis. And this tells me that, I mean, you don't get really, when you see a breakout that goes back literally 15, 16 years, it's very rare you break out and then you just come back down. Chances are this now becomes major support and technical analysis, and it's usually a springboard to a move up. So the euro, you would expect the euro, even if it pulls back now, it should strengthen more against the US dollar. Really, really interesting stuff. Crypto currencies were a little bit on the quieter side, but now these moves in the dollar yen, the euro retracing the dollar, the inverse head and shoulders, all of these things are great for us to learn, but also mean something in the scheme of things. And again, what's interesting is while the yen may eventually weaken, continually weaken against the dollar, the euro looks like it's actually going to strengthen against the dollar after a pullback here. All right, that's the charts. I'm trying to update you guys at least once a week on the currencies. You guys have a great one. Take care.